Hello, this is Tom Cloud with this week's Precious Metals Market Update. I want to start the show by thanking each of you that prayed for my wife. We got good results in New York, and for now she is cancer-free. We do have to go back every 4 months for the next year, but for the first part of it, praise God, everything is well after 9 months of battling that dreaded disease. Thanks for the prayers. I won't get into a review session today. We have done some great things on this show through this year and brought a lot of quick developing things going on in the world that affect precious metals, as well as your future and your survival and your safety and your confidentiality. But I want to go over a quick review and how people can look at this and not see something big is on the move and it's not good. We started with the AIIB, International Development Bank, back in the spring. We talked about when China started a new bank to compete with the U.S. dollar, and the U.S. thought they could hold Australia, New Zealand, and England in it, but all three of them left and joined the new AIIB bank, which takes away power from the U.S. and puts a downtrodden on the U.S. dollar, not right that moment, but in the future. So that was one of the first blows. The second blow, we had the CIPS, the Chinese instant payment system that was going to take away the SWIFT system in the U.S. And this thing is now in place and is already being used. It's already gained 7% of the international trade market, and just going to continue to go up every month till it gets up near 40%, where the U.S. is in these trades. So the CIPS payment system takes away, once again, power from the U.S., the U.S.'s ability to float money and use other people's money, because they always have new money coming in, to actually invest that money and make profit off of that money, because it is a continual inflow of money being used to pay for things in the U.S. dollar in the world international market. So the CIPS is very detrimental to the dollar, midterm and long term, and you will see very negative results in this calendar year 2015. The third are the banks charged for, a few weeks ago I told you there were 10 banks under investigation for currency fixing and forex trading. Well, 6 of the biggest banks in the world have been charged, JP Morgan, of course, being one of them, for over $3.5 billion. $3.5 billion in fines. But what is interesting is the corporations were fined. The men behind it that are doing the trading, that are doing these legal trades, market fixing, not a single one of them have been criminally charged. So the beat goes on. The same old bad boys or the good boys network continue to do these things, and nobody's held responsible. A corporate name is held responsible, and the fine is paid, and the people going right back to what they're doing. But at least the fines came down, and these names were out there in the world of fixing for the world to see. And hopefully you'll get an idea of that. The next thing is the Europeans we talked about 2 weeks ago are now sending notices and posting notices to their citizens that they are not going to have the next bailout when a banking crisis comes. Germany and France have done it, but 11 European countries have been ordered within 60 days to notify their citizens that they will not bail out a banking crisis, and in fact the opposite, they will bail in. Your money will be taken as part of the solving the problem, and because the money in the bank is not your money, and it's not your money here. It's not your money anywhere. So all they got to do is have a crisis in the U.S., and the legislation is already fixed. Your money in your bank account will be taken, or part of it will be taken. There's nothing you can do about it. You have no legal recourse. So I'm just telling you, be ready. These laws are put in place for a reason, and those reasons will be evident as the year unfolds. You must keep your cash in your bank, manageable, and only keep enough in there to run your monthly expenses. Some corporations can't do it, but as an individual, you have no excuses, no reason to yell when there is a bail-in in this country and not the too distant future. Then we go to the Social Security benefits. We're just told by the Social Security Administration, and even Alan Greenspan weighed in, and we sent out an email 2 weeks ago that the cost of Social Security is going up 89% over the next decade. And as he said, there'll be no money in the trust as early as next year. So they keep printing the money, keep on, and all of us know that all the baby boomer generation, me included, we'll see what's going on in Greece, where they keep cutting back the pensions that they had promised to their citizens, to where these people are already cut back 55% and could be more. And let me tell you, people, if you don't think it's coming to the U.S., you're making a serious mistake with your projections as to your income in the future. And if the amount you are getting stays the same, there's going to be so much money printed, it's not going to have the purchasing power. So you've got to be very, very aware of that. We also talk about the debt limit. And now Congress, since August 2011, has just let the debt limit fly up to now where it's just been raised to $19 trillion. People, we're still running $1 trillion deficits, and people are telling you things are getting better. We are devaluing the dollar every day. The only reason you haven't seen it in the market yet has been the problems in Greece, which will come to a head on Monday, and we'll talk about that in a minute. But we're seeing the debt limit very scary, and as I showed in my webinar that I did with Jerry on May the 6th, this is 94% of the time the debt limit goes up, gold goes up with it. We now need to have gold back to 1800 to catch up, since our Congress and Senate allowed this president to raise the debt limit without any discussion in Congress and Senate. Absolutely should be an imprisonable act or an impeachable act. Greece. We'll know a lot more on Tuesday. As I do this on Tuesday, we'll have information on Thursday, and by next Monday, Tuesday, we'll know the outcome of this, whether it's going to be rolled forward, kick the can, or whether there will be a default. There's still people on both sides, and that will depend a lot on what happened to every kind of investment, stocks, bonds, gold, silver, everything. So we'll have our final discussion, or maybe not our final discussion, on Greece next week. And then the billboards. I mean, I've sent out and told you China's working on a gold currency. They're putting pictures of a gold-backed yuan all over the country. People, open your eyes and realize what is coming. We're going to a gold-backed standard. You're going to get a free premium when that happens. Yes, gold has been dead this year. In fact, as I'm speaking to you right now, it's exactly where it started the year. It's done nothing. The stock market's done nothing. Silver's gone up 2%. The bond market's down 7-8%. There's been no good investment for this year, except a few currencies have jumped up 6 or 7% against the U.S. dollar. But it's all settling and getting ready to go a bad direction for the U.S. dollar. Supreme Court decision showing they can now take your 401ks in case of emergency. Many of you have requested it. We sent you out the link, showed it to you. We've sent you out the billboards and showed you the gold-backed yuan currency. We've now showed you where some analysts think gold could go as high as 60,000 U.S. dollars per ounce on this gold-backed currency, trying to back the whole world's debt and having what you call a start over. I don't know if that'll happen, but certainly if it did happen, gold would go to 65,000 per ounce in U.S. dollars. And then we've got countries taking pension plans. We sent you out the Central America country that confiscated their country's citizens' pension plans because they ran out of money. And then the repatriation should be one of the biggest things you look at. We've now had Venezuela. We've now had Venezuela, Germany, Austria taking their gold back from the Federal Reserve. And this week was a huge blow as the state of Texas took their the University of Texas took their $1 billion of gold back from the Federal Reserve. And even better news for you, the Congress and Senate in Texas has passed a law to build a depository. This is very, very exciting. Well, now the gold's coming back, and we're seeing everybody taking their gold away from the Federal Reserve because they don't think it's there. Now, that's a discussion for another day. Certainly, it's very debatable. And then I've told you that we're going to have China joining the IMF and getting special drawing rights around October the 20th. Sometime between now and then, China will announce its gold reserves. And we've been through it. They had 1,081 tons in 2009. We know they've imported at least 4,000 more tons. And if it gets above 8,100 tons that the U.S. Says we have, then it could be proof that we have that China has part of the U.S. gold, and it would throw gold up $200, $300, $400, $500 an ounce very quickly. I still don't know a better place to be diversified, to have in there. And at the price of gold and silver right now, the risk is so low compared to everything else. And I haven't even mentioned the 7.5% drop in the bond market since March. And after a 34-year bull market in bonds, they're starting to sell off and liquidity is drying up. The bond market could be the black eye or the sheep that leads us to the next financial disaster. So all these things out there, and how you, the investor, cannot sit there and do something. You're a steward of your money. You've got a responsibility to manage it well. You need to be spreading it out. And once again, that we can send you the connection to the webinar on FTM Daily, or you can look it up. If you need to talk to us, you can reach us at 800-247-2812. That's 800-247-2812. And if you want to talk to us about a self-directed precious metals IRA, we can help you through that too. But people, time are running out, and things are not going to be the same by the end of the year. And I didn't even talk about the Shemitah and God's timing. Every 7 years that the stock market has come down over 30%, and we're in that Shemitah year. Shemitah ends in sometime at the end of September. With all these things out there, you need to do your homework the next 60 days, because I can promise you, the fall this year will not look anything with the calmness of the markets that you see today. With this week's Precious Metals Market Update, this is Tom Cloud signing out.